Ladies and gentlemen, welcome back to our next presentation called Bitcoin Dollar Cost Average Strategy, in short DCA, something that I have been posted about in our Telegram channel and covering in my posts. However, today I would like to go over again so you understand how to use it for your long-term investments. In today's presentation, I'm going to show you how to implement DCA, Dollar Cost Average Strategy, for your long-term investments. Today, I'm going to explain what is DCA, what are the main benefits of dollar cost average strategy, the most common and best DCA strategies, including regular buy DCA strategy, buy the dip, dollar cost average strategy. I would like to go through Fear and Greed Index DCA strategy, and at the end of our presentation, I would like to explain how to start with DCA strategy for your investments. Let's get started with what is DCA. What is dollar cost average strategy? Dollar cost average strategy is one of the best and safest long-term investment strategies for new investors who would like to enter markets, including crypto markets. It's a benchmark low-risk strategy that is being used by most new and also experienced investors. DCA is all about investing with small multiple entries rather than getting into the market with one single entry. It involves buying equal fiat amounts of the crypto assets at regular intervals, daily, weekly, or monthly. Now let's discuss what are the benefits of DCA strategies. First of all, dollar cost average strategy aims to reduce the impact of volatility in the short term on the purchase of crypto assets. DCA reduces the risk of making an investment at the wrong time. And also DCA is lowering average entry price over time in the long term. With a simple example shown on this chart, you will be able to easily visualize and see what is the main benefit of dollar cost average strategy versus a single entry. As shown on this chart, an investor one has bought 6 Solana cryptocurrencies at the price $215, almost right at the top. So his average price per cryptocurrency Solana was $215. In contrast, a new investor too has decided to invest exactly the same amount of money and buy again 6 Solana cryptocurrencies. However, instead of buying them all at once and going all in, he decided to split his investment capital into 6 different entries, and he was entering market at different times. As you can see on this chart, he bought his first Solana at the price of $40. Then the second one he bought at the price of $80 as it was going up. His third entry was at $120. And then once the price of Solana reached the very top all-time high, he made his fourth entry, bought one Solana at $240, even higher than investor one. And as price has started correcting, he has bought another Solana at price of $160, and his last 6 coin Solana he has bought at the price of $100. Whilst using dollar cost average strategy and buying Solana at different price levels, at lower levels and even at all-time high levels, he managed to lower his entry price, and his average price was $124 compared to investor one that bought Solana all in at once with average price $215. Investor 2, just by using dollar cost average strategy, managed to keep his entry average price, buy price, quite at low levels, with average price 124, which is almost $100 lower than investor 1. So as you can see on this chart, the benefit of dollar cost average strategy by entering markets at different price levels, different times, we are lowering our average buy price. Why we use dollar cost average strategy? It's all about market timing for new investors, as it's among the hardest things to do when it comes to investing. Often, even the direction of market is clear, the timing might be off, which makes for new investors the entire entry incorrect. Dollar cost average strategy is a all about averaging that helps mitigate and lower these risks. Now let's talk about most common and best DCA strategies. There are three famous and simplest ways to use dollar cost average strategy for your long-term investments. Buy Bitcoin and crypto with small equal amounts at regular intervals over long term. Buy Bitcoin and crypto with DCA strategy called Buy the Dip. Buy Bitcoin and crypto with Fear and Greed Index. We never buy crypto when markets are going up, and this is something that you must remember. You have to wait for a correction, consolidation, or accumulation phase. Now I'm going to explain what is regular buy DCA strategy. You can divide this strategy into three different ones. And first one is to buy Bitcoin and crypto daily. Set $10, $15 or more aside and make regular daily crypto purchases over long term. As an example, a person invests $10 daily into Ethereum over 1.5 years, spent in total $5,000, and over a year and a half, he has generated $65,000. Another way of using regular buy DCA strategy is to buy Bitcoin and crypto weekly or monthly. All you have to do is to set equal amount of money aside, be it $50 or $100 or $200 or even more, depending on your financial situation and income, and then invest this money into crypto at regular intervals on a weekly or a monthly basis. Let's say you set it to buy crypto every Monday or every Tuesday or first Tuesday every month or last Friday every month, whatever suits you best. However, it has to be consistent on a weekly or monthly basis. The next strategy is buy the dip DCA strategy. This is about buying Bitcoin and crypto regularly every time market dips and is going through a correction between 15 to 30% on average, or sometimes even more. This dollar cost average strategy should always be followed in the long run. To be able to use this strategy, you will have to keep an eye on Bitcoin and cryptocurrencies price changes regularly, and as soon as cryptocurrency drops, then you enter the market and buy it with your fiat amount of money. As just shown on this chart below, we can see how many corrections Bitcoin has gone through. And as soon as you see the next correction, you can just invest into it. So you are getting a good deal and buying it at lower prices before it goes up. Fear and Greed Index dollar cost average strategy. Buy Bitcoin and crypto every time there is an extreme fear or fear in the market, and when a fear and greed index drops below 30 level. So when you look at the price of Bitcoin or cryptocurrency and monitor a fear and greed index and see that the index is below 30, then you put equal amount of your fiat money into the cryptocurrency and then wait until it happens again. It doesn't have to be after a week or 2 weeks. So it could be a very randomly. However, every time you see this indicator is below 30, then you just invest. You can do that with every time $50. How to start with DCA strategies. Keep an eye on fear and greed indicator and invest every time there is a fear in the market. I'm giving you here a link to this indicator. Go to it, bookmark it as one of your favorite pages. Keep this page open and monitor this indicator. Monitor Bitcoin price changes regularly with help of Bitcoin real-time price tracking platforms such as CoinGecko or TradingView. Wait until it dips between 10 to 15 or more percent and reaches its next local bottom before you are making your next buy. This is mainly implemented for buying the dip strategy. All you have to do is just again monitor a trading view real-time price tracker and keep an eye on price of cryptocurrencies. And the simplest way is to use your bank card and enable recurring buy plan with auto investment option at any cryptocurrency exchange platform to set your regular purchases of Bitcoin on a daily, weekly, or monthly basis. I found this strategy is the best and simplest way because instead of spending a lot of time and monitoring markets, you can just set everything in auto mode. Specify the time interval, specify amount of money, and it will just do it automatically for you. And here's an example of recurring buy plan using auto invest option with one of the cryptocurrency exchanges. On this picture, you can see different cryptocurrencies uh, that have given a historical rate uh, of return, and you can see that in 3 years time it has given the best return. If you look at BNB, BTC, Ethereum, XRP, AVEX, Luna, or Matic, if you create a plan based on 3 years time frame, that you can see how much interest is gonna give you. And for example, if you look at Solana, over 1 year plan, it also gives you a good percentage return. However, if you just for a comparison look at other 6 months plan or dot 3 months plan, it just giving you a negative return, meaning that in the short term between 3 to 6 months after you invest, because of a short-term volatility, you will normally not see any returns. This is why I'm telling you that long-term investment is a key to generate wealth, and so don't expect after investing after 3 6 months to see huge gains, as cryptocurrency markets are extremely volatile and it needs a bit of time before it goes above your initial buy price, and takes time to generate wealth. So dollar cost average strategy should be used for a longer term between 1 to 3 up to 5 years. This is the end of our next presentation, dollar cost average strategy, and I would like to summarize it that dollar cost average strategy is one of the best and safest long-term investment strategies for new investors to enter markets. It involves buying equal fiat amounts of the crypto assets at regular intervals over the long period of time. Just be consistent and patient, and you will be rewarded with a high return in the future. Thank you for watching this presentation. I hope it has been very helpful and now you understand how to implement DCA for your long-term investments. Stay crypto. I'll see you in the next presentation.